All right. Thanks so much, Daryl. Hopefully everyone can hear me and we should be good to go and you guys can see my screen. All right. Thanks, y'all. Appreciate that. So for those of you who don't know me, my name is Allison Ostrander, and I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And tonight I'm going to talk with y'all about how to grow your account the low risk way. So just to start right off the bat, to show you a trade example of this low risk way of trading, I had an excellent signal. This was earlier in the year whenever everything was starting to sell off quite a bit and that volatility was hitting the market. And I got a great intraday signal of a bearish divergent bar. And so I entered the trade. I took what I like to call a profit recycling trade, which is a great way to be able to intraday trade without having to use any of those pesky day trading rules. And we'll talk about that a little bit later in the webinar. I covered it for a minimum $15 profit per contract. So what I did is I took all my risk off the table. I had a $15 worst case scenario on the trade per contract. And then I had basically a free bonus trade where on going into the close that day, I was able to take a total profit of $420 per contract. So the worst case scenario on this trade was $15 of profit per contract. I was able to gain at the settlement an additional $405 to make a total of $420 per contract, which was a 381% return on max risk. So what you'll discover in tonight's webinar. First, an introduction to the low risk way of trading, a trading plan for any lifestyle, and I do mean any lifestyle, a trading plan for any size account, and we'll certainly talk about that. I know that, can bring up questions of, is it really any size account? And to me, it basically is any size account. A no-brainer setup for taking a trade, as well as my targets and trading plans for 2021. So for those of you who don't know me, just to give you a little background about myself, I actually started my trading journey fresh out of college with a BFA in theater performance. And to help support myself, I was introduced to the idea of trading actually by my dad. He had started to learn options around that time. He wanted to get his kids on board because he thought it was a good way to kind of continue to make money without having to rely on a corporate job or something like that. And so to me, it sounded much better than waiting tables. So I was the only one at the time to be like, yeah, I'll do this. I'll take you up on this offer. And so I started attending online webinars. I did one-on-one coaching, thinking that this, sounded much better than waiting tables. It might be actually something I could actually fund my theater endeavors with and stuff like that. And things started to click. I proved myself with paper trading. So from there, I decided to do some one-on-one coaching. And with my first live trade, with my first real money trade, I had completely recouped my coaching fees. I had still locked in an overall profit. And from that moment, I was hooked. And I realized I had soon discovered a second passion of mine. So trading seemed easy at first, right? Especially when you start off with winners as your first trade, it seems like you're like, oh yeah, I got this down. But there was a problem bubbling below the surface that I wasn't aware of at first. And as I continued my trading journey, there were a few things that were negative to me in regards to trading, right? The first one were that my eyes were glued to my charts and futures long after market closed. I would be up watching, how Asia would open, how Asia would close, how Europe would open, how the futures were doing in the markets, how a particular symbol I might be trading, how that looked on after hours trading. And so I'd be up almost all night just looking at these things and wondering what that was going to do to my trades the next day. And of course, because I'm up all night, that led to a lack of sleep. And part of that was, of course, me keeping an eye on everything. And the part of that was because of how many trades I had on, right? I had a lot of trades on, which is what kind of kept me up at night, wondering how they were going to work out. And of course, when you get that lack of sleep, right, your emotions start guiding your trading instead of the technicals, all the things that I had learned up to that point. Once I started to do some live trading, part of it started to get thrown out the window because I was just being hopeful that things would work out rather than just purely taking the emotion out and following the technicals. And of course, when you let emotions guide your trading, right, you end up with a staggering loss. And to me, I could not believe that I took the loss I did in my account. And it made me certainly step back. And I had to figure out, okay, there's this dark side of trading for me, right? For my Star Wars fans out there, it's what I like to call the dark side of trading, where your emotions kind of run rampant. And I was like, okay, what is the issue here? Why am I getting so emotional when I was doing so well at paper trading and so well starting off initially? And I realized that all these issues stemmed back to one source, which is capital risk. And in turn, it was what my own personal risk tolerance was. And so this lack of understanding capital risk fed into all my negative thoughts about trading, and it fed into that dark side of trading, right? You don't want to go to the dark side of the force. So this, of course, causes more and more emotions to guide your trading and could lead to further losses, because once you start to compound on those losses, it's hard not to become emotional from that point. Maybe some of you guys have been there as well, to where you're just like, man, I'm starting to just throw money at the wall, hoping something will stick, right? And then you realize that you're really not having any trading plan involved. You're just hoping something's going to work out and make you money. And that, to me, is the dark side of trading. So what did I do? Well, my new focus completely became about risk. It was my main focus. It's still my main focus today around my trading. And each trade I took constantly had me analyzing my risk versus reward. That's still the case today, right? I'm still analyzing my risk versus reward on trades that I took just yesterday, both on the individual trade as well as for what it's doing to my overall account. And anytime I look at trading or develop a new strategy, risk is always my guiding focus. It is always at the top of my list, because when I have a better grasp of risk and what that means for my account, it leads me away from the dark side and it allows me to be profitable. So the first step to low risk trading, and this to me was the profit recycling strategy. Maybe some of you guys took this class with me a while ago, but it's a way to intraday trade options without technically day trading. So this focus on risk led me to the profit recycling strategy. I created this strategy because I struggled with risk and my own risk tolerance in the past. And at the same time, I am very much a day trader at heart. I do not like to keep my capital out there very long, which was great when I was trading large accounts. But when I managed small accounts, it left me with a measly 3 trades per week. And it was not something that I liked having, right? I've traded very large accounts, over 7-figure accounts. I've traded, very small accounts, which we'll talk about here in a second. And I did not like having to all of a sudden dial back into 3, day trades per week and having that limit there. And so I knew there had to be a better way to grow these smaller accounts while still keeping in mind my risk tolerance. I was not about to just jump off the bandwagon on my risk, right? So when using this strategy, I was able to grow an account from 10,000 to above 45,000 in just under 3 months. And the best part about that growth is that I was never fully invested in my account. When the account started to get above 35,000, the most risk I ever had out there at one time was 7,000. So it just shows you that, I can have a very nice account value with 35,000, but I'm still having less than half of that account out there as overall risk to continue to try and grow it. So when growing this account, a lot of these trades did not have overnight risk. This means my risk was typically covered within the same day, and sometimes it was only out there for a few seconds at the time, very much like the first example that I talked about at the start of the webinar. I was only in that for probably a few minutes before I was able to get that quick cover on my capital and then left myself out there with the free trade. And these trades were done by taking advantage of intraday moves while avoiding those pesky day trading rules, right? So I felt like I had unlocked a whole new level when trading with the profit recycling strategy. It's almost like when you're young and you play a game of like Super Mario 3 or something like that, right? And you're in the first world and it's all grass and pretty and you beat it. And then all of a sudden it takes you to the desert zone and you're like, oh my God, I didn't even know there were more levels. Or at least, when you're a kid, you're like, I didn't even think that this was possible. And so that's what I felt like the profit recycling strategy did to me with my trading. And there was nothing that was going to slow me down taking these profits with low risk. And for a while, this was a very accurate statement. This is how I did my bread and butter of trading. But just like in our trading journey, our life also brings about new paths to explore. And so now I want to talk about trading for any lifestyle and in turn, the overnight profit strategy. So I recently made the wonderful and maddening decision to have not only one, but two kids born in less than a year apart. So after my first daughter and with another one on the way, I had started to get back into that routine after maternity leave, right? I felt I had started to get into a good groove of work and family life balance. And I thought that this was the new flow that was going to continue, right? I thought I had kind of my game plan on point. And then the coronavirus hit, right? And it was a new way of life for everyone. And not only did markets start to plummet, but stay-at-home orders were issued. And I found myself once again at home trying to balance work, trading, my daughter, who still proved that she liked to run the show. And some of you in the options room or in the training room know that she still likes to try and talk and give her input on a chart. And of course, I had another one around the corner who is very much loves to be held and have attention. So, you know, I had all of this on my plate, but I wasn't too worried. And I know that kind of sounds crazy, but the reason why I wasn't worried was because I already had developed a strategy from my first round of maternity leave with my daughter that I knew had an excellent win rate and required almost no time in front of the computer. And so this is my second tool in my toolbox, and it's the overnight profit strategy. And this is a great strategy for those of us with very limited time to pay attention to charts and markets, right? Maybe you're working like I am, and so you just don't have the time because your commitment is to other things to make money, right? Help support yourself. Maybe you're also like me and you're a mom, or you have children at the home. And of course, you know, with school still being in and out of being in person, you know, maybe you're stuck at home trying to get them to do their homework and their classwork while at the same time trying to do your normal things around the house. Or maybe you're just retired, right? You don't want to sit in front of your computer all day. You want to go and golf on the golf course. You want to go enjoy the beach or go out for a run or go, you know, to a restaurant or something like that. And this strategy allows for me to create profits, even though I can't necessarily take advantage of some of those intraday moves like I used to. And it's a great strategy for anyone who doesn't want to sit in front of their computer. And even though I couldn't lock in profits the same day, I typically would not hold this trade longer than 3 days when taking a signal off the daily chart. And I know for an intraday trader, right, 3 days sounds like an eternity. But I know for some of the other traders out there, 3 days is no time at all. So here's an example of the overnight profit strategy based off of, in this case, the weekly chart. So the weekly chart, just to give you guys a note, I usually allow 3 weeks for that to work out. But oftentimes I still find myself taking profits within the next trading day, which is why this strategy is still called the overnight profit strategy. So in this case, it was a weekly signal off of Microsoft, a nice bullish divergent bar there. I opened it on the 9th. You know, this wasn't too long ago. Did the overnight profit strategy, closed it on the 12th. And I did this in 2 accounts. And the smaller account I was trading out of, which had less risk, it was a $55 profit per contract, which was 100% return on the risk, right? So it was a $55 risk and a $55 profit in that account. And the slightly larger account where I had a little bit of a different strategy on, I took a $103 profit per contract, which was an 80% return on risk in my larger account. So once again, I kept in mind my risk, right? You hear me continuing to push that out there, and it's never going to stop with my trading. And by using vertical spreads to help reduce my capital being held overnight, I was able to stay within my low risk tolerance and not let the dark side of trading try and creep in, even though I was holding this capital overnight, right? Which, you know, can sometimes, especially if you have a lot invested, that's, you know, to me where the dark side really starts to come in. And so by using vertical spreads to help stay within my personal risk tolerance, I was able to avoid that dark side of trading while still being able to take these signals and profits. So using this strategy, I typically don't start searching for trades until the last hour of market, and I don't place them until usually the last 30 minutes of market going into the close. And after market close that day, I would usually look to place my good till cancel order. And as the name implies, most of the time this trade was held from just one market day into the next, allowing for quick profits without that capital being out there for very long. So as I mentioned earlier, you really don't need that much time in front of the computer. If you can just dedicate yourself really to the last hour to 30 minutes of market to search and maybe implement some of those trades off the signal, then you're good to go. And from there, you can kind of just let the trade go, see if it can hit your good till cancel, right? Or maybe modify the order if you want to. But here's another example on Netflix. This was a bullish signal off of the 13th of October. Once again, did the overnight profit strategy, closed it out the 14th, took a 108 profit per contract, which was a 63% return on the initial risk. So this is the perfect strategy for people who work during market hours, are juggling kids and family like I am, right? Or a combo of both, which is exactly what I'm doing. And it's also great for those who want to do other things with their days instead of staring at their computer, and yet still make profits as if they were there the entire time, right? So it's a great way because it's wonderful to be able to grow your account using this strategy and not have to necessarily commit the full market day to sitting in front of your screen and your charts. So as I mentioned earlier, I am an intraday trader at heart. And sometimes at the market open, when the house is calm before the storm, right? When everyone's kind of still trying to wake up for the day, or during that beautiful moment of the day called nap time, which is starting to get a bit more consistent, I found myself looking at the intraday charts wanting to take a move. However, you can imagine just how fickle that nap time can be. And I just didn't have the luxury to sit in front of my charts as I used to not only follow through on my signal to entry, but also to cover and exit the trade. So because of that, this is where I started to develop the Profit Recycling 2.0 strategy. And this is, to me, a great strategy for the busy intraday trader, right? It's a time-efficient way to intraday trade options without necessarily having to sit in front of your computer to do so. So this option strategy is primarily used to intraday trade without having to use any of those pesky day trading rules, very much like the original strategy. However, unlike normal intraday trading, right, which causes you to stay at your computer watching the charts, very much like the first strategy does allow for, this new take allows for more consistent follow through on a very simple signal. So the Profit Recycling 2.0 strategy, as I mentioned, is an update to the original, where capital risk is much more controlled going into the trade. So with the original strategy, usually I would start off with a long call or put or something like that, building into it, which, you know, is great. It allows for that unlimited profit potential, is how I was able to grow that account so strongly in a very small amount of time. But it's also riskier, right? There's data decay and other things that I need to be worried about. And so I knew that if I wanted to attempt intraday style trading again, I would have to find a way that protects against that data decay and still keeps risk low and can follow through on the signal, even if I'm not directly in front of my charts. And that, you know, kind of seemed like a lot to ask for to be able to intraday trade, but I did find a way. And so here is another example on SPY this time of a bearish divergent bar. And this, once again, was when volatility was a little bit more ramped up. So it's very easy to do both the profit recycling strategies when volatility is rather high. But they also work great just in normal markets as well, especially the 2.0 strategy. So I got my signal, I took a trade, I covered it for a minimum of a 105 profit per contract. So the worst case scenario on this trade, once I profit recycled it, was $105. And the next day I closed it out for an additional $62 for a total of $167 per contract. So not only did I have a minimum profit that I walked away with, but I was able to add on a little bit of a bonus profit to it to create that total profit overall. And the best part is when I added on that bonus profit, I technically had no risk out there at the time. And this is a 3% return on my max risk that I had out there initially. So this new way of looking at intraday trading allows me to become more flexible with my time while still taking trades from as small a time frame as an intraday chart, right? You can certainly use this strategy also on the daily and weekly chart. Actually, we have already started the mastery with a few trades, and one of the trades that we took recently with SPX, we've already profit recycled on the daily chart for a quick minimum profit, and we'll look to see if we can't close it out this week for a bit better of one. But the benefit about both profit recycling strategies is not only do you lock in a profit and recycle the capital risk back into your account, but you also set up a free zero risk trade, like I mentioned. And so what I mean by a free zero risk, right, is that all the original capital that was first put out there is now protected back into your account, right? Once you've profit recycled the trade, all of that capital that was out there that was risk is now back in your account and it's protected. And ideally, so is whatever the minimum profit is. However, with this free trade, it gives you the chance to potentially take an additional profit. This means the initial profit you locked in is the worst case scenario on the profit you are taking for the trade. So that's the worst case scenario out there. So here is another signal off Amazon. This was off the weekly chart, right? So as I mentioned, it's great for intraday trading, but you can still actually use this strategy off longer charts like the daily and the weekly and still be able to give yourself that free trade. So with Amazon, I took this action on the 9th. I profit recycled the trade. I ended up with a 350 minimum profit per contract. So once again, that was my worst case scenario on the Amazon trade. And then I ended up closing it out a little bit later, adding on an additional $81 of profit to bring a total of $431 of profit per contract, which was 132% return on the initial risk at hand. So the strategies, right? So this toolbox of strategies are great solo, but are also wonderful when combined for growing your account. And some might be asking, well, how big of an account do I need to be successful? And the answer is almost any size account will do. And so that's what I want to introduce to you guys next is what size account to be successful. I want to talk about my $500 challenge. And some of you guys might have known about this from before I took my second maternity leave with my son, right? I was doing these challenges. I was posting some of the trades to Twitter. I was hosting it on Twitch. We talked about it in the room, certainly. And so the easy part, of course, about trading is when you're working up into larger accounts, right? When I was trading, 7-figure, 6-figure accounts, it's that you can still take the same trades that you would normally do in a small account. You just increase your contract amount so that it fits your new risk tolerance, right? So working up into larger accounts, it's pretty simple. You just add the contract amount you want. You still keep it, of course, within your risk tolerance for whatever size account that is, and then you implement the trade. However, what about if a trader starts with a very small account? How small can that account be to still successfully grow it? And so this is where I came up with the $500 challenge. And as some of you may know, as I mentioned, before taking my second maternity leave, I decided to grow an account starting with only $500 of capital risk. And I wanted to see how I could grow it within a month's time while still being mindful of capital. And the reason why I did this challenge, there were a few reasons actually. One of the first reasons was because I had a lot of people coming to me once the market dropped like it did. I had a lot of people coming back to me being like, hey, is now a good time to invest in the market? And a lot of them were, people my age or younger, which oftentimes isn't the case. Usually I'm talking to people older than me. So I very much on top of risk want to get people my age and younger involved in trading sooner, because I think that if you do, you don't have those preconceived notions that you sometimes get when you learn about the market prior to actually starting your trading journey. And I came in with a completely blank slate when I first started trading. And I feel like that kind of helped me out some and being able to grasp, what that dark side of trading was for me a bit more quickly and being able to successfully grow accounts like I've done. So I wanted to be able to get people my age involved, but I knew that, money is certainly an issue, especially with people still paying student loans or trying to save up for things or, starting a family. So I wanted to do it with only $500 of capital, right? Something that could easily be saved up to. And at the same time, I still want it to be mindful with this $500 capital of risk, right? Because that's still a good chunk of money. That's a few, electricity bills paid, or that's, certainly a few years of subscriptions like Netflix and Prime and things like that paid for. And so I still want it to be very mindful of this $500, but figure out how I could grow it within a month's time. So I know that sounds silly, right? 500 could easily be taken up by a one contract trade. How are you going to be mindful of risk? Well, I adapted my 25% rule for investing for the small account. And then I took my toolbox of strategies and I went to work. And starting with such a small account meant I was cautious about my capital, right? I kept my trades limited so they could fit within all the guidelines. I was very picky about what trades I entered, but I was also very mindful still of my risk. And I still never invested the full $500 of capital when doing this challenge, right? I still actually kept with my rules around risk tolerance, but did so in a very small account. And so the results of the first challenge is, after taking into consideration the commissions and everything like that, right, was just a few dollars shy of 100% return on the account. And to make sure it wasn't just a fluke, I immediately jumped into a new challenge the next month. And so in the next $500 challenge, I was only able to keep it on for roughly 3 weeks, because the fourth week, I had to start considering my next delivery date. With my first daughter, she came early. And so I thought I would still have time. And I was literally in the hospital with her, trying to exit out of trades that I had expiring on a Friday. She came on a Thursday. And so I didn't want that for my second child. So I decided to end this one a little bit early, just in case he was coming early, which he did. And so even with just 3 weeks and limited trades and still keeping my risk small, I was able to lock in a 62% growth in the account value, right? So this shows that even with a super small capital amount, and more importantly, still being controlled on that capital risk, right? Not putting that full 500 into one trade or not investing the full amount, I was able, using this toolbox of strategies, to be able to successfully grow the account while still being mindful of that capital risk. And so here is the account, right? I did this in Thinkorswim, the 2 challenges, and total out of the 2 that I did, I locked in $953 of profit before commission. After commissions, right? It was about $144 of commission. So after that, it was about $808 of profit. So in total, this is a 161% return on that $500 of risk in roughly 2 months. And so, after the first challenge, I took that money out. I paid myself, started once again with the 500, took the profits off. And so it just goes to show you that you can consistently make these profits here and still be able to grow the account. And, not everyone was a winner, right? For example, what was this? Chevron, I think it was, right? CVX. That one ended up with a loss overall, right? I also had a loss, I think that was on Intel. So not all my trades were winners, but by being mindful of my risk, right, and looking at the signals properly, I was still able to overcome those losses with profits and still able to pay myself at the end of the month with those gains. So here's an example of this strategy. Once again, here's a bullish signal on the 23rd. I took a profit recycling trade. It ended up being a minimum $50 profit per contract, which was a $105 total dollar profit, a 41% return on that initial risk. So now that we have a toolbox of strategies that can help grow accounts of any size, we now need to know when to implement such strategies. And this is where my dynamic duo of indicators takes center stage. So one of the main keys to these strategies being so successful comes from the divergent bar indicator and the compound breakout tool. So just a little bit about my dynamic duo. As a person travels along their trading journey, right, they discover new ways to identify setups on the charts. And so the first one, the Batman of the 2 indicators, is the divergent bar. And it was one of the new ways I found to identify a setup. And to identify a divergent bar, it takes time to do the math. And the problems that I personally ran into is at the time it was too long, right, to sit there and do all the math. So it kept me from finding setups quickly and being able to go through as many charts as I'd like to determine if it was valid or not. And the other issue, of course, is I had to do the math by hand, which is subjected to human error. And, personally being dyslexic myself, it's very easy for me to quickly try and look at a number. I'm trying to rush and do things fast. And I flip the 2 numbers around, so I do the math thinking I have a valid signal when I really don't. And then I'm stuck in a trade I'm having to manage because the entry was never there. And then the other indicator was the Robin, right, of the 2 indicators, which is my compound breakout tool. And this one actually is a combination of multiple signals that I look at on 3 separate studies. And it's the stochastic spool, the MACD histogram, and several different simple moving averages I like to use on my charts. So all 3 of these studies individually can be great to look at, but can sometimes lead to false signals individually. When I looked at all 3 indicators combined with the signals that I was looking for, it helped clear out those false signals, but it still created a completely cluttered chaos on my charts. And if you think my charts, you know, have a lot on them now, you did not even want to see them prior to the compound breakout tool being created. And so I knew there had to be a simpler way to view these signals. And when I joined Simpler Trading, I was introduced to the master inventor of indicators, Mr. Eric Purdy. He's the director of quantitative strategies here at Simpler Trading. And so I was told, right, I didn't need to know coding. All I had to do was ask and tell him what I needed. And so I found myself at his doorstep, hoping he could once again work his magic for the divergent bar, just like he did for the compound breakout tool, and to figure out a way to where I could quickly identify both of these and see it in a much more easy to read way on my charts, and also to be able to see it quickly with just a quick glance rather than spending the time really focusing in and doing that math. So I explained to Eric the criteria and math needed to determine both individual indicators, and he was able to create the divergent bar indicator in the compound breakout tool, or as I like to call the dynamic duo of indicators, which is what I used primarily in the profit recycling 2.0 strategy. But to be quite frank, I use these indicators on any trade I take at this point. Most of the time, I love when there's a divergent bar indicator. I always take into consideration the compound breakout tool. And so I use these on any strategy I trade, not just with my toolbox at this point in my trading journey. So what does the divergent bar indicator do? Well, this is used to help determine whether the next bar or two will create a higher high or not compared to the current bar. And it can also help determine whether the next bar or two will create a lower low compared to the current bar. What does the compound breakout tool do? Well, this one is used to determine the type of trend, whether it's bearish, bullish, or consolidating. And it can also help identify the start as well as the end of that trend. So it's a great way to be able to, you know, look for a start of a bullish run and jump into something and really hold on to it until that signal starts to cancel itself out. So here's an example of both the divergent bar and the compound breakout tool in SPX. Here, for example, we had some nice bullish divergent bar. These are the light blue colors on my charts. Here is the compound breakout tool down here. Once I had 2 of the 3 lines print green, that was a valid bullish signal. If all 3 print, it's an excellent signal. But you can see I had a bullish signal here. And so on every bullish divergent bar that you took during that time, you had excellent follow through of that higher high. Here, it was the next day higher high. Here, next day higher high. Here, technically a next day higher high, but you could have held on to it and certainly taken a profit by that 3rd day. And here was a bullish divergent bar, right? Next day higher high. So the divergent bar indicator and compound breakout tool can be used on any time frame. It can be used from an intraday time frame as well as all the way up to a monthly. I will note the divergent bar indicator, I typically don't look at below a 30-minute chart just because it can start to get a little noisy. But the compound breakout tool, I certainly look at on all my time frames. So I know some people with the divergent bar indicator like to use the candlestick bar. I personally use the standard bar. The divergent bar indicator completely works with the candlestick bar. If you have the grab candles, for example, or the 10x bars, this indicator will technically conflict with your charts, but what I like to do personally is I'll just put my chart up in grid mode. And on one of the grids, I'll have the grab candles, for example, and on the other grid, I'll have the divergent bar. And that way you could still technically use both signals if you wanted to combine those indicators for your own trading plan. So the best part about the divergent bar and the compound breakout tool indicator is once it's uploaded, there's nothing else you need to change except for if you want to change the color. Eric has done an excellent job creating these indicators. So once it's added to your charts, you're really good to go. So here are some more examples of this toolbox of strategies. Here, for example, was one on match. Had an excellent entry back here with a bullish divergent bar on the 22nd. I profit recycled the trade on the 23rd and ended up with a $375 minimum profit per contract, which was a 65% return on my risk. And what was great about this trade is I profit recycled it knowing that I would have a free bonus trade to hold into earnings, right? So for those of you who love to trade earnings trade, I certainly like to trade them. It's a fun, like kind of lotto trade. When they work beautifully, right? But when they don't, you have to be okay losing 100% of that capital. Well, profit recycling using this strategy is a wonderful way to go about not having any capital risk out there, but still being able to trade around earnings, right? And kind of have that fun lotto trade out there. And in the case of match, I didn't get any extra profit, right? So the minimum profit was my total profit on this trade. But the best part was I didn't have another trade out there that had capital risk that I ended up losing on, right? So instead of taking a loss, my worst case scenario was this minimum profit. So here was an example on Plug recently. This was back on the 4th. I took a profit recycling trade on the 5th, ended up with a 103 minimum profit. Once again, this was a fun lotto trade to hold through earnings. This one as well, didn't take any additional profit on. So my minimum profit was the total profit on the trade, which was a 64% return on risk. But I was okay with that because, once again, it was a free trade to hold through the announcement. I didn't have any capital risk out there. So instead of taking a loss like I normally would on a lotto trade that doesn't work out through earnings, I ended up still with a profit overall. So here was another one. So this one I actually alerted to the room. I opened it as 2 contracts in my account. One of the contracts I profit recycled. The second contract I just did the overnight profit strategy with. On this one, I actually held it for 2 days just because I wanted to continue to see the run up. Everything was still valid and bullish, so I held it an extra night. And that second day, I ended up closing it out for $148 of profit per contract, which was a 91% return on risk. So one trade I had as a free lotto trade to hold through the earnings announcement, and the other one I just took the profit straight off the table. So Tesla, here was another example of a bullish divergent bar that printed on the 13th. Notice how the compound breakout tool was in line, right? So my Batman and Robin of indicators are in agreement. This one actually also had a nice squeeze that was printing with it. But I still ended up just taking that profit off the next day. And the smaller account I was trading, it was $102 a profit per contract, which was a 59% return on risk. And the slightly larger account, similar profit, it was a 103 profit per contract and a 44% return on risk. Starbucks here had a beautiful bullish signal on November the 6th. And this signal was on the daily chart here. So we had a nice bullish divergent bar, beautiful bullish signal in the compound breakout tool. We actually had that squeeze also printing on the daily chart. And on the weekly chart, we didn't have the compound breakout tool, but we did also have a bullish divergent bar. So we had 2 bullish signals with the divergent bar on 2 separate time frames. So I took the trade, ended up closing it out that Monday, right, on the 9th, for a 326 profit per contract, which was 133% return on risk. So that bullish divergent bar on both of those time frames allowed for that beautiful signal and entry right before that squeeze fired to the upside and allowed me to take that profits the next trading day. Here was an example on Zen. Took this trade on the 10th, did the overnight profit strategy, closed it out on the 11th for an $88 profit per contract. So once again, beautiful signal here on the compound breakout tool, great bullish divergent bars, ended up following through to allow for that quick profit to be taken. Here was one on Match. This one was based off the weekly chart after the earnings announcement. We printed for the week a bullish divergent bar, so I opened the trade on the 6th. I gave myself time for the trade to work out, but still was able to close it that Monday, right, that next trading day, for a $52 profit per contract, which was a 44% return on risk. So what's next? Well, certainly blowing out your account can be frustrating and disheartening, right? I've been there. That dark side of trading can just eat away at you psychologically, and it can be really hard to kind of recover from that if you want to continue to trade. So, I've been there myself. And certainly in the current work from home environment, even the most seasoned traders can still have problems with juggling responsibilities and still growing their accounts. I know I am including myself in that. Still trying to juggle everything and be able to grow things. And of course, everyone can use some extra clarification on the chart and narrowing down great entries and exits. So, well, let's talk about going into next year, right? I know going into the end of 2020, I want to get a fresh start on 2021. And so my trading goals for 2021 are to grow an account, only using the toolbox for trades and paying myself once a month in profits. So I have my main account. My main account, I like to test out new strategies, see what's working, what's not. So that way, if I find something that's great, like the strategies I talked about here, I can alert it out to y'all and teach y'all. But I want to open a separate account now to where I strictly am only using these strategies. And that way I can take out my profits once a month and start paying myself. The second goal that I have for next year is continuing with the $500 challenge. I had a lot of fun doing that for, roughly 2 months this year. And so I want to do it once a month each next year and see if I can keep up this track record of taking profits out in a very small capital amount. And of course, still being mindful of my capital risk with that capital amount. And then, of course, the third thing I want to do is start growing an account for my kids, right? Based on a longer term setup. So kind of looking at weekly and monthly charts and either jumping into shares or maybe jumping into longer term trades and kind of growing their accounts that way. And being able to leave them with something, once they turn 18 or, once they're graduated from college or, whenever I decide to let them take reins of trading, or maybe sooner if they really want to jump into trading like I did. I wouldn't mind that. So those are my goals for 2021. And I will say, starting off with the mastery, right? We've already opened about 4 trades. 2 of them are still open. One of the trades we already took an overnight profit strategy on. So we opened it, closed it out the next day for a quick profit. And on the second trade that we closed out of, we technically haven't closed it, but we profit recycled the trade. So we have a minimum profit of $40 per contract, or at least that's what I have. I know some of you guys got a better fill than I did. And now I'm left out there with a free trade going into the end of this week. And so I'm ending 2020 ideally on the right note. And I want to push this right note into 2021 with my targets and goals in mind for next year. And so keeping my risk at the forefront, like I always do, right? Making sure I'm not over investing in my account and keeping my toolbox by my side and my dynamic duo of indicators ready to pounce. I am ready to start growing my accounts once more. So does player 2 want to enter the game, right? Do you guys want to join me on this trading game and journey? And so this is the Profit Recycling Mastery. This is what I'm really excited to introduce to you guys. And it's monthly live trading sessions with me and using this toolbox of strategies to really grow the account. So who is this program for? Well, the goal is to target short-term moves without triggering that dreaded 25K day trading rule limitation, right? So if you have an account under 25,000 and you want to try and grow the account and take advantage of intraday moves or quick overnight moves, this might be the program for you. And the strategy can be implemented with both swing style trades as well as intraday moves within the market. And it's ideal for traders who seek consistent weekly gains with limited time to be able to sit in front of your computers and maybe limited capital investment, right? So if you've ever struggled with risk or you want to learn kind of the strategy maybe before buying the class, right? The classes that are over these strategies teach you how to fish so that you can go out there and do it yourself. But maybe you want to go to the store and try salmon first before you decide to just completely go out into a fishing boat and try and catch some for yourself. Well, this is a great way to start to learn about some of these strategies without necessarily, being out there afloat in the ocean. You can kind of follow along with me, see why I'm taking these trades the way I do. And if a particular strategy really fits your trading style, from there, you can start to teach yourself how to fish. And I'll certainly be, teaching y'all things in the mastery, but I'll also be providing you with some real trade ideas that I'm personally implementing in my own accounts, right? And just like I want to be successful, I want y'all to be successful too. So and these strategies, they haven't just worked for me. So, I had a comment saying, thanks for teaching us about recycling risk and legging in. Since learning the strategy, their account balance grew 25%. So, it's not just me that's benefiting from these strategies. It's not just like this is strictly only Allison can do this. No, I've, gotten a lot of great feedback from people who have taken classes in the past or who have followed along with my trade alerts and how they've been able to still use these strategies for their benefit as well. And so here are the live trading sessions. It will be the first Wednesday of every month from 1 to 3 p.m. So we can really dive into real trade ideas in real time, start going through the scanner, trying to find those divergent bar setups on Thinkorswim and implementing trades in real time, as well as answering your questions too. So our first live trading day is coming up on December 2nd, which is next week. I'm really excited for it. I can't wait to pop in there and talk with y'all and answer y'all's questions. And then, of course, here are the rest of the dates on the calendar for the year. So this Profit Recycling Mastery, right? How much does it cost? Well, the quarterly membership is $397. And the annual membership is $12.97. And this is a limited early bird pricing. I've been told that the pricing is going to go up later, next year. So certainly if you want to get in now and kind of test out these strategies for yourself, or, see what it's about, certainly this is the best time to do it, because this is going to be the cheapest from what I've told that it's going to be offered at, right? This is the early bird pricing. And, I can't promise or guarantee anything, but very much like my $500 challenge, right? If we do a similar result as we did with the first 2 challenges, that challenge could easily pay for a quarter membership, right? So for 3 months, you can pay for that ideally with just $500 of capital. Now, like I said, I can't guarantee anything. I can't promise it's going to work. We don't know, what the market's going to hold for us. But if we can keep up the track record that we had on the first 2 challenges, that's a great way to still be able to pay for this with a very limited capital amount to do so. And so what does the mastery program include? Well, it's of course including those live trading days where I'm going to hop into the room. It certainly includes real-time trade alerts, right? So, outside of the live trading days, I'm still posting trades in there. I'm in the chat typically when I'm posting these trades. So when you guys have questions in the chat, my chat room does stay open in the mastery. So that way I can talk with y'all if y'all are hanging out in there. And certainly you guys can converse too, right? And, as long as it doesn't get toxic in there or anything like that, which I can't imagine. We're all adults, right? But it stays open, so that way you guys can ask each other questions as well as ask me questions whenever I'm able to pop in. There's, of course, a trade spreadsheet, so you can see how the trades have been doing, follow along, just get updates on, okay, I didn't take this trade. How did it work out for her? Or, man, I'm still in this trade. Did I miss an alert? Check out the trading spreadsheet. You'll know whether I'm still in it or not. And of course, what to expect with this mastery program, you can watch over my shoulder as I scan through trade setup, so you kind of get the idea of why I'm jumping into trades. Understand why I might lean towards one setup versus another, right? Why I might consider doing a profit recycling strategy versus the overnight profit. Or, what kind of markets implementing what strategy. Like I said, volatility certainly makes for excellent profit recycling trades. So if volatility picks up at the start of next year, much like it did this year, might go to that tool in our toolbox. And then, of course, you can catch up once a month for some live trading where I can discuss in real time with y'all as we look for setups together. But on top of watching over my shoulder, you will also have access to my personal watch list that I run my scans on. So for those of you with Thinkorswim who, maybe have the indicators that I do, you'll also have my personal watch list. There's also a Thinkorswim link in there, so you can easily add it if you have Thinkorswim to your charts. If you don't have Thinkorswim, that's okay. I've also listed every symbol on that watch list. But that way you can start, fishing for yourself if you wanted to, right? Follow along, do the scans, see if you're finding anything. And you can also choose to follow along with the same trades that I'm placing in my account, right? I'm placing my own money in these trades, so I want them to work out just as much as you guys do. And all the trade alerts will be sent through the room and can have push alerts and notifications sent to your smartphone, so you're never missing a trade action that I'm taking at all. But one of the good things I also like about this is for traders who like longer term setups, there will also be a bi-weekly video. So every other Thursday, I will be going through my charts, looking at longer term setups on the weekly and monthly chart that I'm keeping an eye out for a potential entry on Friday. And so I walk through these ideas. Sometimes I don't implement them in my own accounts, but it doesn't mean that you guys couldn't implement them if they're still valid signals. And these trades will be based off of, like I said, more the weekly and monthly timeframes. And, like I said, one of my goals this upcoming year is to be able to get into some of these longer term trades or, start investing in some shares to be able to give my kids something later in life. So this will be a great way to be able to do that. And if that's something you're interested in doing, these bi-weekly videos should certainly help out with that. And then, of course, understand what market environments have me leaning towards a specific strategy and why. If 2021 is anything like 2020, then we are sure to see some interesting volatility and market moves, right? Who knows what's going to be around the corner for next year. So once again, this isn't just me where these strategies are working out. It's not just me where the indicators are working out. Quite a few people have, responded back to me, have gotten to me, telling me how, it's helped not only with just trading and growing profits, but how it's also been, keeping their stress out of trading itself, right? I've had a lot of people come back to me saying, you know, thank you. I've been able to get out of that dark side of trading. And it, you know, that's really the main thing that I want, right? I want y'all to be able to use these indicators to help clear out the noise and getting into setups. But I also want you guys to be able to take a rein on your emotions, right? Take the risk back into your own hands and be able to manage it so that you're never getting stressed out about your trading overall, that you have an understanding of the risk that you're putting out there, and that you're, one, okay with putting that risk out there, and that it's within your tolerance to do so. So at the end of it all, right, I want to leave the guesswork out of your trading with a simple step-by-step plan on finding these trade setups and jumping in, creating profits in your account while spending less time in front of the computer, and learning about the different strategies in the toolbox, as well as the dynamic duo setup for when entering the trade. So just to let you guys know, we do also accept PayPal credit. So you can just add the product to your cart and click PayPal credit. And that way, if you didn't want to pay that, you know, bulk yearly fee, right? If you wanted to sign up for the year, but not necessarily have to pay it all up front, this is a great way where you can spread out those payments with 0% interest and get it paid off that way. Maybe start using the trades that are coming in as profits to, you know, pay that off each month through the service. And like I said, it is limited early bird pricing. So there's that quarterly membership at $397 and that annual membership at $1297. You can go to simplertrading.com/recycle or give us a call, right, at 512-266-8659, and we'd be happy to help sort you out. And so if you guys have any questions, please let me know. Now is the time, and I will spend some time here answering them. Let me just move this over so you guys, you know, can see the number up there and stuff. I know I've missed some. I did see one earlier. Does this include the indicators? No, the mastery doesn't include the indicators. You would have to get that separately if you wanted them. But once again, right, if you kind of want to see how these indicators work first before maybe purchasing them for your charts, this is a great way to be able to view in real time how I'm looking at the setup, why I'm taking it. And if you like what you're seeing on the charts, if you like what you see during the live trading sessions, then, you know, maybe you could look to purchase them if you didn't want to purchase them immediately or something like that. So you technically don't need the indicators, because if you're choosing to just follow along with my trades or, you know, the entries that I'm talking about, I already have them on my charts, right? So technically speaking, if you're following along, you don't really need them yourself if you don't want them. But if you do want to teach yourself how to fish one day, or you do want to follow along and maybe look for your own setups as well as looking at mine, then certainly it's something to consider. David's asking, how many mastery trades do you typically take in a week? It all depends on how many signals I get. So far, I've entered 4 trades. I've certainly found more signals, but I'm trying to be mindful and, you know, conservative about the entries that I've taken. So, you know, we've taken 4. There were 3 weekly setups on the bi-weekly video that I did last week that you might have taken as well. So there are definitely the setups out there. And we also discussed them in the room. Just today, I had a few people in the chat ask me, you know, does this symbol have a valid setup? Does this one do? And I had the time to be able to actually help and look at it for them. So I, you know, pulled it up on my charts and I said, yes, this one does actually have a great valid setup. And the other one, I was like, nope, no setup at all. Not a trade I would take using these strategies just because it doesn't match my parameters. Please explain recycling covering risk. Yes, so the profit recycling strategy is used implementing, depending on what strategy you're looking at. You start off with one strategy, like a long call or put, or maybe a vertical, and then you work your way into another one to cover that risk. So for example, the one on SPX that we did where we've profit recycled it in the mastery already, we started with a vertical spread and then went into a butterfly covering that risk. So there's no technical risk out there on the trade. It's a minimum $40 per profit per contract. And then we still have the butterfly trade technically out there to allow for that additional max profit potential. And Joe, we only meet live once a month. So for the actual live trading, it is only once a month. But like I mentioned, I am in the trading room in the chat. I try and be there at least towards the end of the day and at the start of the day. When I'm not in the main room options room session or things, or in the training room, I try and stay in there. And then, of course, I am still sending out trade alerts, even outside of the live trading event once a month. So you'll constantly be getting alerts from me. But we do only meet once live in session to kind of go through things together. But that doesn't mean we still can't talk in the chat section, right? So, Marty, the classes, there are 3 different classes. There's the original profit recycling class, the overnight profit strategy class, and then the profit recycling 2.0 class. All 3 of those classes are the strategies that I'm using in this mastery. So if you wanted to do your own fishing, those are the 3 classes that will be kind of implemented around these strategies to work off of if you wanted to do your own fishing. But like I said, if you wanted kind of a taste test first, right? If you wanted to test that salmon out before getting it, this is a great way to do it. And then, sorry guys, I'm just trying to catch up on your stuff. Patrick, what type of trades do I make? Long calls, long puts, vertical spreads are certainly great because they certainly allow you to control your risk tolerance. So I do trade with verticals quite a bit. Also, butterflies are what I look into. So if those strategies kind of sound new to you, another benefit about the mastery is it does have its own learning center. And in that learning center, I have created introduction videos to both vertical spreads and butterflies, as well as to introduction videos to profit recycling and the overnight profit strategy. So if you're new to those strategies, and like I said, you kind of wanted to test things out, you can learn more about them in the Learning Center videos that I've created out there for the mastery. And this is, yeah, 100% options, guys. So I'm only trading options out there overall. If I do some shares based off of a longer term setup, I'll let you guys know. But for the most part, my main goal is to keep this strictly into options trading. Gary, yes, I would say this is still good for a novice. You could also check out maybe Simpler Trading's Foundation or Training Room if you wanted to get a little bit more education. But like I said, for these strategies that I'm teaching about, I do talk about them in the Learning Center. And I'm always happy to help answer questions. So if you're in the chat, feel free to ask a question and I'll be happy to, help answer it to the best of my abilities. But I do try and keep this as simple as possible. Marty's asking, how is the original different from the 2.0 strategy? So the profit recycling 2.0 strategy is a great way to protect yourself against theta decay. If you're talking about the class, it protects you against that theta decay and the strategy itself. It allows me to take signals more off of the 30-minute or hourly chart to take intraday moves. And that's what allows me to help not necessarily sit in front of my computer, but still get the follow through and the profits that I'm looking for versus the original strategy. And in the class, I also walk through ways where you can, if a trade starts to go against you, right? So let's say you're in a bullish trade and you have a long debit call vertical spread to play to the upside, and all of a sudden that move just isn't working for you. It's turning flat or it's reversing back down. I talk about in the class, and certainly if, hopefully we won't have to, but if we do ever need to manage a trade in here, you might find ourselves doing it in the mastery as well. But we talk about how you can flip from one strategy into another. So if you're in a long debit call vertical spread, we talk about how you could flip that into a iron condor or flip that into a credit spread to fit with what the chart is telling you signal wise, and still try and take a profit that way. And no, you don't have to buy the indicators, guys, if you want to purchase the class, if you don't want to. And I 100% use the compound breakout tool and the divergent bar with the squeeze. If I have a squeeze out there with those two, it usually makes for a great setup. And I'm usually happy to take it. Like that Starbucks one was beautiful when all three of those were in line. It's what I do. So for those of you asking, how do I get the alert immediately after I take the trade? Yes, it's immediately after. And what I try and do is when I'm first looking for a signal and setup within that first 30 minutes of the last hour of trading, I'll usually start to write and type out my trade alerts prior for what I'm looking for. So that way, once I start to decide, okay, I'm going to go ahead and implement this trade. Once I implement it, I can immediately copy over that entire alert, paste it into the room. So that way it's an immediate, I got filled, you're getting alerted. So I try and keep it like that and, don't have to waste the time typing it out after I enter it. That way, ideally, you're still getting in at the same pricing I am. Well, great, John. Look forward to seeing you in the room tomorrow. What type of option strategies do you use, like spreads? I am new to options, so you will explain how to trade them with your course. Yes, so in the Learning Center, as I mentioned, I can just pop it up here now. So here's actually the mastery. So here in the Learning Center is 6 different videos. They go over butterflies and verticals. They go over both the overnight profit strategy, so you have an idea of what that's about, as well as the profit recycling strategy. And they also go over the indicators. So if you wanted to know a bit more about the indicators themselves before purchasing them, or maybe you have purchased them and want a little bit more education around it, those are great videos to look at and consider there as well. Yeah, for the $500 challenge, it was a similar situation to where I usually looked for trade setups within the last hour to 30 minutes of trading, unless it was an intraday move that I took. Otherwise, for charts off of the daily setup, it was usually within the last hour of trading that I was looking for the setups. And yes, you can buy the indicators separately. So if you have one from a prior class but wanted the other one, absolutely, you can buy them separately. And no, unfortunately, the classes are separate. Tastyworks is great. I love Tastyworks. That's the main one that I use. I also use Thinkorswim as a brokerage platform. The indicators that I have can be used both on the Thinkorswim platform and TradeStation, and we are actually in the works of getting some of our indicators onto Tastyworks. So I'm really hoping and kind of trying to push my 2 indicators onto that platform as well, if it is able to be coded onto their platform. That way I have a second charting area too, which would be wonderful. And I do have a list, so I always start with my watch list, Raj, on Thinkorswim. And the great thing about the Thinkorswim scan, right? So here was actually a list from today. I didn't like any of these setups, but here were ones that were giving me bullish divergent bars. I scanned for it within the day, and it's from my default watch list. But the great thing is that they have categories. So if I didn't really like a setup here and I was still searching for a trade I wanted to enter, I could go to something like the S&P 100 and scan that and let it pop up with symbols, right? So not only do I have my own personal watch list, which has quite a few, but I have all these other watch lists that I can start scanning for symbols for that divergent bar indicator. Is usually what I scan for first. Tim, Thinkorswim is just one of the main accounts that I've used since I started trading. I've been with a lot of brokerage platforms in the past, and Thinkorswim just has one of the best charting out there, so it's always been consistent with me. Tastyworks I have found to be extremely easy to use. So if you're newer to trading or you want a simple way to be able to click and get into trades, to me, Tastyworks is one of the best platforms for that. But if you have Fidelity and you like how their platform's set up, if you're used to options trading on there, you could use that. I think Robinhood technically has options trading. I have a Robinhood account, but I have not traded options out of that ever. So I couldn't give you any information there on that one. And all your orders can be placed on Thinkorswim. What I do for the trade alerts is I copy them from the Thinkorswim platform, even if I'm just opening it in Tastyworks. That way on the alert section, if you do have Thinkorswim, you can just literally copy the alert part, paste it into Thinkorswim, and it should copy over correctly the right trade strikes and everything like that. And yeah, I do recommend Tastyworks. I really like their platform, and their commission rate's quite good. And yes, so for the divergent bar indicator, just to go back to one of the chart examples there. Here we go. So here is one on match, right? This light blue bar on my chart is the divergent bar indicator. Like I said, you can change that to any color. And here you can see with the next bar, it followed through with a higher high. Here was a bullish divergent bar on match on the weekly chart. That next week, it followed through with a higher high on the next bar. Here was a bullish divergent bar. The next bar followed through with a higher high. And usually I give it 3 bars to work out. So sometimes it doesn't immediately follow through, but usually by that 3rd bar, so this 3rd week here, it technically had followed through on the higher high. And if you remained patient on the trade, maybe if you bought yourself more time or something, certainly that 4th bar would have given you the profit. Here was a bullish divergent bar. That next bar was a higher high. Here was a bullish divergent bar. Probably not one I would have entered because of all the resistance above us. But even if you did, right, it was that 3rd bar that allowed you to take that profit. Technically, these 2 bars would have given you a profit if you got in towards the close. But if you're looking for that higher high to follow through, that 3rd bar gave it to you. And I mainly do options trading. I'll sometimes look at stocks, and I don't usually trade futures. It's something I've started to learn, but I haven't really dipped my toe into the water yet to do live money just yet there. The difference between the compound breakout tool and ready aim fire is made up of multiple stochastics, if I remember correctly, whereas the compound breakout tool does include the stochastic full, but it also looks at the MACD histogram and several signals that I look at on my simple moving averages. So they aren't in combination of the same indicators. From what I've been told from people who have both of those on their charts, they do sometimes make some really nice signals when they're in agreement. I personally don't use the ready aim fire, though I use more the compound breakout tool, but they do track 2 different things. So that's how they're different. And yes, 100%. So in the trade alerts, Kamar's asking, do we get explanation for the trades which are taken outside of the live trading days? Yes. So not only do I try and completely put my thought process behind why I'm getting into a trade, what I'm seeing on the chart, you know, why I chose the strikes that I did on the risk versus reward or anything like that. I try and explain that in the alert. But also usually when I send out an alert, unless, you know, the kids are just giving me a crazy day, I do also follow through in the chat. So if you have any questions in the chat, once I send out an alert, right, if you hop into the chat room or maybe you're already in there, you'll usually see me, you know, happy to answer questions that people have about a specific trade. Or, you know, I had somebody who wanted a SPY equivalent for the SPX trade that we got into. So I mentioned what I'd look at on SPY. So absolutely, I try and be, you know, as mindful in there as possible to talk with you guys. So that way you really understand what my thought process is. And if for some reason, you know, we don't get around to it, on that next live trading day, we can certainly go back and revisit the trade and, you know, talk around the thought process then before trying to find some new ones to jump into. And yes, as soon as you sign up for the mastery, you'll have access to everything. And I'm still looking for new trades. I'm going to look for some tomorrow. I think today was the first day I didn't jump into anything. So definitely have some capital that we can put back in there. And the actual live trading sessions will be from 1 to 3 that first Wednesday of the month. Otherwise, the room starts with the open of the market and, you know, I'm out of the room at the close of market. So it all depends on what's happening. If we're taking profits in the morning, right? Or in this case, this morning, we profit recycled SPX when it gapped up. And, you know, locked in profit, took a free trade there. And then into the close, I was looking for trades, didn't find anything really until actually the last few minutes, which wasn't alertable at that point, unfortunately. But we talked about it in the chat. So, you know, benefit of having that chat room open. And the live, the masteries, it's already started. So you can hop in tomorrow. The first live trading session, though, will not be until, there are the dates, until December 2nd, for those of you who are curious. So that's the actual first live trading day. Otherwise, though, 100%, you know, we're still taking alerts, still doing trades prior to that. And I'm not quite sure how much the indicators are priced at the store currently. You might be able to get a bundled deal on the indicators. I'm not quite sure, but if you call in to Simpler Trading, I know that they'd be able to help you out with that, certainly. And yes, Talia, I have what I like to call my 25% rule. And maybe that's a video I'll add into the Learning Center. I'll have to create it. But it's a 25% rule where basically very shortened. I could certainly talk about this for a while, but a very just short version of it. I take 25% of my account to invest into multiple new trades. I take 25% of my account to put as management for any new trade that might get behind, right? So if I want to cost average a trade or maybe flip it into a different strategy, but it's going to cost me some capital, that's what that second 25% of my account is for. And usually the last 50% of my account I leave untouched. That way I'm never overinvested. I always have money in the bank. If I'm doing this, you know, as strictly income, you know, if you're trying to be a trader for purely income as your job, that way you have money in the bank to still pay yourself if you have a down week or a down month or something like that. And then, of course, you know, God forbid you lose on both, you still have half of your account left to where you can take a step back and say, okay, what happened with my trading plan? Why did I lose on all my new trades and all my management? Was I, you know, did I fall into the dark side of trading? Did I get too emotional? Was I not following my trading plan? Was I taking too many lotto trades? I did that last year where, you know, when I took a step back at the end of the year and was looking at everything, I was like, man, I took way too many lotto trades. Those, you know, ate up more of the profits than I would have preferred. So this year I stuck away from doing lotto earning trades unless I profit recycled into them. But that's what I personally look at when calculating trade size based on account size. And certainly, you know, in the mastery on that next live trading day, I'd be happy to go into that in more detail. And I do have it scanned off of the divergent bar signal. I'd be happy to share that with you guys. And the divergent bar the compound breakout tool is a little bit different. I do have a scan where it will show up when all three of them print on the day it prints. But there's a lot behind that indicator that it makes it a little bit harder to scan for. So my workaround to that is I'll scan for the divergent bar, and then I'll pull up the chart and I'll just take a quick peek at the compound breakout tool and see if it's an agreement or not with the divergent bar that I'm looking at. Yeah, Cole, the divergent bar indicator was originally introduced in the overnight profit strategy class. And then I do also talk about it in the Profit Recycling 2.0 class. So in both of those classes, I educate y'all on what the divergent bar indicator is. So depending on, you know, which one, if you did want to purchase one of those classes, you can see which one kind of fits your trading style before getting it. And Sandman, you don't necessarily need to be at your computer at the end of the day to benefit from the trades. What I would suggest doing is just having your push notifications on, right? So if you have your brokerage platform where you're able to enter trades on your smart device or your phone, like we do with Tastyworks and Thinkorswim, both of those have their own apps. What you can do is just allow the push notification to come through to your phone. You can, you know, look at the trade alert. If it's on Thinkorswim, you can try and copy and paste that into the app. I haven't tried that technically, so I don't know if that works that way. But if not, you can look to immediately pull up your app, set up the same trade, and then implement it that way. Technically, that way you're not in front of your computer, and you don't have to sit there waiting to see whether or not I'm going to open a trade that day. But if you get the notification, you can go ahead and open it at the same time. Excuse me. Hey, GJ, if you can only schedule yourself for the last hour of market, to me, you're good to go, because that's when I implement most of my trades using these strategies. So you'll probably not miss out on much. If anything, you might miss out on some of the intraday trades if we take some of those signals. But otherwise, you should be able to follow along. And then what you would want to do is just set up closing orders, so that way you have closes set up for the next morning. And then, you know, kind of as I mentioned earlier, if you're not able to sit in front of your computer necessarily, but you see a notification saying we've taken profits on a trade, you could always quickly go to your phone, adjust your good till cancel if you wanted to take the same profit off the table, and close it out that way, sort of situation. So that's my time, guys. I do have to go. I have one kid in bed. I still have to, you know, do bottle feedings and things like that for the other one. So thank you so much for joining me. I hope this was informational to you guys, and certainly thank you so much for being here with me. For all my Star Wars fans out there, as always, guys, no matter what, may the trade be with you. I hope you have a wonderful rest of your trading week and a wonderful Thanksgiving if you're here in the States. If not, then just enjoy the market holiday, right? And I look forward to hopefully seeing y'all in the mastery. But if not, have a wonderful rest of your evening. Bye, guys.